Good morning, welcome to Trade Live with IG. It is the 23rd of September. It's a Tuesday, and there's something different about this studio. Yet again. I think we've got another upgrade.
Every time I present on Trade Live with IG, there's something which has changed about the studio. Literally.
Not just am I on a different side, but we've got a new table. Let's go to the wide look at that. It almost looks like we're meant to be a TV studio. Good morning, everybody. How are we doing? So yes, up and away. And I am on the other side of the screen as well.
Was this yours or was it Phil's?
Idea?
Yeah. For you to sit on that side of the desk.
I don't know. I just get told.
You get told. Because Phil was bossing me around this morning. I came in. I've got this gilet here, which I really like, and I'm really fond of. And he goes, "You can't wear that."
That's a really nice. That's the kind of Reese.
Yes, it's from Reese. Yeah.
Yeah.
And I've obviously colour coordinated it with my polo top, especially for today.
Speaking of the devil, here he is. Let's go wide shot on producer Phil delivering.
He's made up by getting a little bit of milk for me.
That's milk. Oh dear, what are we? What's coming up on today's show? The table does need a new logo maturing. It feels a bit naked, doesn't it? Right, coming up on today's show, as I said, Tuesday, 23rd of September. We've got Mini Cooper right through till 8:35 when, yes, Julian Wheeler is back. The man of MongoDB fame.
MongoDB?
Got to buy him a bottle of whiskey. The man made me over $2,000.
Wow.
You got it. It's just...
You got to give him something.
Yeah, it's rude not to, isn't it? Right, I'll pop out in the morning and get a bottle of whiskey for Julian. 9 a.m. we've got the All Sessions opening bell with Angeline. And then at 9:10, Garth McKenzie's here. So another trader in to talk about how he feels about the market right now. So that'll be good. That'll be good.
Jam-packed morning then.
It is a jam-packed morning. How have you been?
Good. I had Wednesday, Thursday, Friday off. Went to stay around my grandparents.
Nice.
That was very nice, relaxing. So unfortunately, I couldn't come on the show last week.
We miss you on Fridays.
Yeah. Well, I wasn't here last Friday, obviously. I'm doing it today, this week, and then next Friday I will be in Sweden. So I won't be doing next Friday either, I'm afraid.
What are you off to Sweden for? With Ronnie?
No, unfortunately not. I don't think Ronnie would go away with me, he told me. I don't know why. I'm going with my friends from school, so it should be good.
Oh, great. So this is the same crew that went to...
we went to Lisbon together, yeah.
To Lisbon together.
Yeah.
And you survived that one.
Yeah,
Are you going to survive this one?
We'll see.
Only time will tell. Good stuff. Right, let's go into... no one saw Guess the Chart, did they? That little mistake dropping up. Kate Murphy, excited to see you this morning, Mini Cooper.
Thank you very much. Shout out Kate Murphy.
As I was excited when I walked into Pret a Manger this morning.
What did you say?
So I actually got an Uber to work. I normally get the Underground, but I've got a 50% discount on my Uber execs at the moment.
Oh, wow.
They're just thrown offers out.
You use it so much, right?
Well, I think because they had a massive windfall from the tube strikes.
Oh.
That they've decided to take that profit and invest it back into getting people hooked to take an Uber. So I thought, I won't fall for it, but I'll take advantage of it. And so got an Uber into work. Stopped outside Pret, went in, and I thought, right, I normally get a croissant. I'm going to upgrade this morning. I'm going to go to a bacon roll. And I picked up the bacon roll, and I was walking, and I thought, no, I can't have a bacon. Like, this is going back to Greg's kind of...
Yeah, but it's healthy, so it's fine.
Yeah, really healthy, isn't it? And then I saw porridge.
Okay.
And I've never had porridge from Pret before. So I went for that. So I feel like I have been healthy.
Was it like normal porridge, or was it like golden syrup flavoured porridge?
You get the porridge, and then you put some honey.
Oh, okay,
they give
that's
you a little
good.
sachet of honey.
Yeah, yeah.
So yeah.
Very nice.
So it's all changed this morning.
Yeah. I'll go back on desk, I'll have a banana, I'll have a tangerine, and I may have an apple, because my colleague Sam got me an apple cutter, because I only eat apples which are chopped, you see.
Right.
I don't need like whole apples.
Why?
So, I don't know, it's just a thing. So it's got this metal cutter, which you just go bang, and then it cuts the apple into like maybe 5 or 6 different
It takes
slices.
the middle bit out.
Yeah, correct, because it's got a hole in the middle, and it goes bang, so it just takes it out.
I'm going to have to come around and try that later. Right, who have we got in this morning then? Supersonic Neil Brewster. Not me, little bit of Riz, as the American kids say. What does that mean?
Riz.
Riz.
In, I think.
Well,
Riz
I think
in
I know
English.
what Riz is, but I don't think that's cutting an apple up. Have you got any Riz? Does Mini Cooper have Riz? That's the first poll of the day. Does Mini Cooper have any Riz?
Well, I don't know what we mean by Riz here.
Not me. Will explain more. Yeah, it'll be overnight oats next. Scarpa. Steve is loving part. Oh, we got two Steves in. God, this is going to get confusing, isn't it? Steve Davies, he's passed it. I hope you mean Mini Cooper. And Kate Murphy, 69 hours into a 72-hour fast. Why?
That is impressive.
Tell us, why are you fasting for 72 hours? That's very impressive. Maybe her yacht has run out of food in the Caribbean somewhere. Right, we're going into overnight action. We're going to talk Porsche. We're going to talk NVIDIA and OpenAI. And we're going to talk about that plonker Stephen Moran. So I think, where do you want to start? Do you want to start off with Porsche, because that's yesterday's news? But it was, you know, it was a big profit warning, wasn't it?
Yeah.
So run us through your thoughts on this one, Minnie.
Sure. So I did a little bit of prep before, of course. So I've got the article from Bloomberg, okay? And the main reason, like you can see on the screen, is with respect to their electric vehicles. There's not as much demand as there previously was projected, hence they're cutting back, and it's cost them a lot of money. Obviously, you would have noticed Volkswagen, because Volkswagen own Porsche, their share price is also being very negatively impacted by this.
Yeah.
And one of the main reasons is because the demand in China, where initially that's like the main target market, right? There's not as much demand there, but in addition to that, there's local competitors such as BYD, which are cheaper than Porsche, and they're becoming a lot more popular. So as a result of that, they haven't done as well in those regions. But in addition to that, the US either, with the tariffs.
The tariffs, yeah.
Yeah,
so they're getting hit from all angles, aren't they?
Yeah. So it doesn't look good for Porsche. But it's gone.
This is their fourth profit warning, though.
Yeah.
So, you know, I think we have to kind of take into consideration there that is it all in there now? Normally, you know, they're down 66% from when they were taken private. 66%.
As well, you could argue that if there was, let's say, a recession, which is going to happen, then of course Porsche is a luxury car. You could argue that could reduce demand as well.
Yeah.
Potentially not as much as, because like I said before, I mean, markets are China and US and Europe primarily, where you would see the demand for Porsche. So it's dependent upon them. But I would argue that recession would be a small factor as well.
Yeah, definitely. But is it now priced for it? You know, so obviously Porsche and Volkswagen have this not only cross ownership, but they also build their cars together. So a lot of the technology and the same as in the production process. So is the Porsche brand still as big as it was? I would argue yes.
Yeah, I'd argue yeah. I mean, yeah.
Not in electric world.
No, not in electric.
But the brand will survive.
Yeah.
So we've got no question about that. 4 profit warnings in, and a margin, right? A Porsche margin of 2% is what they are now guiding towards. It was between 5 and 7, and now it's 2. Are we getting there? You know, okay, we might see it a little bit lower, but if you're looking to buy Porsche, not buy a Porsche, but if you're looking to invest in this company, then I'd certainly start my DCA now, right? And okay, I'd buy some at 41, I'd buy some at 39, some at 37. But if you believe in this long term, right, now the electric the move to electric is being
it's
pushed
not
out.
it, yeah.
Yeah, they've basically stepped away from it. They get back to selling the huge popular cars, combustion engine. I don't know. This is the kind of thing that I would look at with that I'd be interested in.
I mean, the main factors I'd say are the tariffs in the US and what happens with demand in China. That's overall what I'd say the two main factors of what it's dependent on. Obviously, I mentioned the recession before, but that would only be a much smaller factor than the other two.
Let's just have a look at a company that has got it right. Which one should we go?
You're going to say BYD there?
Here,
Ferrari.
Here is your other side of the coin. Here is Ferrari.
Do Ferrari do electric cars?
No.
No.
Oh.
Your phase.
But yeah, the stock almost trebling from back in 2021, and it's held it. That's the important thing. While Porsche's dropped 66%, this has almost held the highs. So
I mean, loads of the German car manufacturers have got absolutely smashed, particularly with respect to Trump's tariffs.
Yeah.
Absolutely hammered. So it's not been a good time for them at all.
No. So I don't know. Let's look at Volkswagen as well.
On Porsche,
yeah.
I noticed. Well, I read yesterday how it's basically dropped out the DAX, so the Germany 40, and what it's dropped into is. So Porsche AG is set to be removed from Germany's DAX index yesterday and will join the MDAX, which is the mid-cap index in Germany.
Yeah.
Yeah.
Good old MDAX, right? So that is a sad story, isn't it? Well, and that's yet to happen, or it's just been announced?
That happened yesterday.
Ah.
Yeah, so it's removed on September the 22nd.
Right. So all that selling's also been done. Volkswagen, very similar picture there. How do we feel about Volkswagen? Would you rather be in VW, Audi, Skoda, or would you rather be in Porsche?
Well, VW, Audi, Skoda.
Yeah? You'd rather be in the mass market, as you say about recession.
Yeah. Definitely those three over just Porsche.
Do you know it's the same CEO for both companies?
I didn't know that.
It's a tricky situation. I think that might change some point in the future now.
Well, given what's going on, then yeah.
Yeah. Right, indeed. Funky Gibbon asking, has Plug Power sparked into a breakout? Plug Power, huge day yesterday. Of course, this is one of Piers's absolute beauties. He's had a great few weeks, hasn't he? Look at that. First called it on the show here at $1.10 back in June, and we saw it, potentially peak there at 186. It came back to 150, and now 270.
What happened on that? Was there news or?
Well, let's see what is. No, there wasn't. There's nothing out there, so I'm guessing it's sentiment. But this takes us on to NVIDIA and OpenAI. So this was the big story. We're just going to leave the screens up there, I see, guys. This was the big story yesterday. NVIDIA investing up to $100 billion in OpenAI to build data centers. So to give you the idea, and I'm doing a circular motion here, NVIDIA is giving OpenAI $100 billion for OpenAI to buy NVIDIA chips. And do you know what's wonderful? When you give somebody $100 billion, but your market value goes up by $200 billion in a matter of hours.
Because I was
business.
Yeah. When that news came out, I was working last night, so I did 12 till 8. Mm-hmm. Okay, so I therefore saw that NVIDIA. I mean, it only rose. Must have been like $4 or $5, which I say isn't that much, but given the size of NVIDIA, then of course, like the move you say, what did you say, $200 billion?
$200 billion,
which is crazy, because NVIDIA came out last week as they were going to I think it was $5 billion in Intel.
Yes, correct.
Yeah. So
right, so this is the biggest infrastructure project in history That is according to Jensen. It's the largest compute deal in history, and it's going to make up the majority of the infrastructure.
NVIDIA said on a statement, to support this deployment, including data center and power capacity, NVIDIA intends to invest up to $100 billion in OpenAI as the new NVIDIA systems are deployed.
So if I'm going to liken this to another deal, it's kind of like when you take a phone contract out and they give you the phone for free, right? So what what NVIDIA is doing is giving Sam Altman the chips.
Yeah.
Right. Forget the cash. They're giving them $100 billion of chips, right? And that locks OpenAI into the NVIDIA infrastructure, which means it will use the software going forward, which means that, you know, Jensen is a genius.
Yeah.
Right? He's locking them in for the long term. So that meant Broadcom was down 1.7%, Intel down 2.7% on the back of this. AMD was up 1.6%. But yeah, a really strong day for NVIDIA. If this comes crashing down at some point. Trump said it best last week. He says, Jensen, you're taking over the world. I really hope you're right on this.
Only time will tell.
Only time will tell. That's right. I thought we might have a nice graph there.
Oh,
but no.
I was going to say, sorry to interrupt, Rich. I've got a great stat from Chris Beecham.
Oh,
so if the S&P and the FTSE 100 were to both continue growing at their 10-year averages, so 14% versus 7%, then the S&P 500 would have overtaken the FTSE 100 in points sometime in 2030.
Nice. That's a great stat. Go on.
I don't know whether it's just so bearish on FTSE or so bullish on S&P.
If I'm having trouble sleeping this evening, can you just forward that to me? I'll read that in my Bible.
It just makes me now so bearish on the FTSE in like the long term. I don't know what it is. Are you bearish on FTSE, Rich?
They've told you to. They've
No,
told you to say this to wind me
Chris
up.
wouldn't do that. Chris would not do that.
He literally, Beecham's turned around for you on the desk and went, go on, throw this little thing in. Just see if you can get the fish hook in his mouth. Right. David Boyce is up 96% on plug in 2 weeks.
Congratulations.
Boyce, you are having a month, sir. Also had his Intel options as well. It's not just me buying Julian Wheeler a bottle of whiskey. I think Boise has to buy Piers.
I think with this being up 96%, it's actually quite difficult to not actually close your position, because when Axel, for those of you who don't know, Axel does like a technical analysis course with our premium clients. Okay, and one thing he really highlights is that clients, when they've got a loss and it's running, they just keep it running for a long period of time because mentally they don't want to realise that loss. But when there's a winning position, they often close it too early. Don't let it run long enough, but let those losses just keep running. So to be 96%, I can't get my words out, 96% up, I think is quite a difficult thing to do, and to actually keep that position without fully closing it.
I mean, there's other alternatives, right? It's a spectrum of keeping it all or selling it.
Yeah, so you could come out of some like 10%, 10% sort of thing. Yeah, you could potentially do that.
Or the age-old rule is take out your initial investment and run the profit.
Exactly.
So then you can never
lose more than you put in.
Yeah.
Yeah, very true.
Okay, we've got Oracle and Orsted to do. Which one do
also
you
wanted to talk about Barrick Gold.
Well, hang on. Let's jump to Orsted first. Orsted has had a horrific few months because Trump blocked a $5 billion project just off New York that was 80% complete. Like brain dead. Absolutely brain dead.
Why did he do that?
Because it has taken government subsidies to generate more environmentally friendly energy, and of course Trump doesn't believe in the environment. Sorry, doesn't believe in global warming. So therefore, he's cancelled it. And
Dear.
thankfully, the judiciary saw otherwise, and federal judges granted request by Ørsted to restart work on the Danish offshore wind developers' almost completed Revolution Wind project off Rhode Island. So this has been a big thing because obviously Ørsted couldn't sell a part of the project, or it couldn't finance, so it had to do a rights issue.
Okay.
So the share price has been destroyed. On the back of this, it was up 8.6% in the US yesterday.
Not
but
bad.
let's just take a look at
Have a look at the price chart.
how much this has been killed. Since the announcement, because not many people are going against Trump.
No.
Most people have learned their lesson, haven't
Yeah,
they?
you wouldn't want to.
Ørsted is still going against them because it's their whole business. So look at this thing since Trump got elected.
Doesn't look nice, does it, Rich?
367 down to 110. It's almost as bad as Porsche. So what do you do now? The stock is looking up 8%, but you've still got Trump as an enemy. And you've got another project in the US as well. Another thing he doesn't like is 85% of wind turbines are imported. So he wants to tariff the hell out of those as well.
I certainly would not be buying Ørsted based on what you've just said.
Great company, but
If Trump's against you, though.
yeah. Yeah, and also it's the Danish government. So didn't he have a spat with Denmark originally over Greenland?
Oh, yes, because he wanted to buy Greenland, didn't he?
So
Crazy.
So this is
And he also wanted Canada to be part of the US, didn't he, as well?
yeah, but this is part of the fallout of Denmark telling him no, you can't have Greenland.
Okay.
So kill them through by killing Ørsted. Tricky, isn't it? Right. Okay. Sorry. Go on. You were going on to Barack Obama.
Oh, yes. Headline is Barrick shares soar as analysts cite game changer gold find. So Barrick Mining Corp shares on their biggest tear in 5 years on prospects that a US project will become a major new gold mine, boosting the outlook of a company hit by setbacks in risky places.
Wow, they did 7.5%. My
Yeah.
goodness me!
Yeah.
Look at Barrick. Wow, what a time to find gold.
Yeah, particularly given that it's all-time highs at the moment. And I keep reading articles how it's just going to keep going up and up and up.
Oh well, no, but that's the whole market. Yeah, the market's going to keep on going up and up and up because when you read articles about it, it's not already in the price. You know, Chris Beecham can take another 6 years of the S&P doing the same thing, and you know, and so that's what's going to happen.
I hope
the market only goes up.
I hope Chris is not watching this. He'll get upset.
I almost upset him yesterday,
Oh,
telling him that seasonality.
yes,
Is just-
yes. He actually mentioned that to me this morning. Talk
yeah.
about
Well, see,
seasonality,
I knew
look.
you were talking about it. Right, so we've got, yes, Plug Power up, 170%. Do we have a stock that beats that? Yes, we
Must be
do.
one out there.
Defense Holdings. Defense Holdings has been an absolute stonker since Graham Dixon was on the show, up from 57 to 233 yesterday. Oh, it closed at 245 or 233. I mean, these guys are coming on and just giving absolute gold. It's brilliant.
Is this based off tensions in Europe with Russia flying drones over Poland and Estonia, or?
No, it's a very small company. You know, big risk warnings on trading, both Plug Power and this. But at the moment, the market's rewarding risk taking until it doesn't. And yeah, so Defense Holdings, Graham Dixon will be on next week to update us on both Pensano and Defense Holdings. And then Piers is on the show tomorrow. So we've got Piersy coming in to update you on Intel, Oracle, Plug Power, NVIDIA, and why he
Lovely
has
stuff.
now sold almost everything.
Now sold almost everything.
Piers is out. He's short NASDAQ here.
Short NASDAQ.
Another man who's short NASDAQ is my co-presenter of The Art of Investing. Which one? Is it the chairman or is it the big bull? The most bullish man I've ever sat next to is now short NASDAQ as of last night.
I mean, short in NASDAQ, I mean, it's like...
Because it never goes down. You've read articles that it's going to keep on going up, haven't you?
The thing is, what I think will happen is it will carry on going up and there will just be a correction, but you won't know when that will be.
That's the problem.
Know how big that will be.
Well, you know it's not going to be small.
No. Yeah, I mean, there was, well, when was it? Start of April, it must have been down like 9-10% in one day.
Yeah.
But you just don't know when that is, you see.
Mini Cooper, we've managed to get through to 756 already.
756. Time flies when you're having fun.
Indeed. It's that Reese.
It's the Rigelet, that's what it is.
The Reese, that's almost one word, the Rigelet.
French there.
Right, well, we've already seen the guess the stock chart, so do we have to do that again? They gave you a little flash, but now you're going to see the real thing. The stock trading at 71 of which currency? It's a US stock. What's trading at 71? Okay. My sister messaged in yesterday that she loves the music on Guess the Chart. So well done, producer Phil and James Watson. Yeah, I'm hearing a lot of good feedback on the Guess the Chart music. So let's go to it. We'll see you in 2 minutes.
Well, the footsy's dancing in the morning light. Shots on the screen and the game's in sight. Axel's got a trade, says it's looking hot, but Rich is clicking faster than a scatter shot. Haynes lanes in, says hold on boys, I've got questions, don't make no noise. Producer Phil says here's the next slice, and please remember, not financial advice. Guess the chart, let the fiddle cry. Is it shell or rose, will it soar or die? Trading live with IG, we're riding high. Phil's trying hard just to trick your eye. One chart's running like a horse on fire, another stalling just to climb up higher. Rich is betting big on a short he sees. Ames says data first, if you please. Phil drops a curveball, makes him sweat. The kind of chart you won't forget. The bell hits the string, sparks start to fly as the market jumps like a bull gone by. Guess the chart, let the fiddle cry. Is it BT's break or Tesco's high? Trade live with IG, where we're riding high. Phil's trying hard just to trick your eye. One fiddle's blazing, the other's fast, just like a chart when it breaks at last. Hands on the keys, eyes on the prize, while they're guessing that chart neath London skies. Guess the chart, let the fiddle cry. Is it gold or steel, will it pass us by? Trade live with IG, we're riding high. Phil's trying hard just to trick your eye. Yeah, the song plays on and the guess.
Right, breaking news. We've got the opening indications, and Kingfisher have absolutely smashed it out of the park. A beat and raise. That's, of course, remember the profit warning in Next last week. So there was concerns around UK retail coming into this. But first half PBT is 368 million, significantly ahead of consensus of 326.
There we go.
Big beat down at B&Q. What have you been doing, Minnie? Those home renovations. It's the studio.
It's the studios.
Why aren't we long Kingfisher, knowing how much we had spent in there on the studio? So yeah, really good one there. Right, get that bell in your hand, sir, because we are about to go to The London Stock Exchange opening bell brought to you by Mini Cooper.
New bell.
Here we go. It's a slow open this morning. I would imagine Kingies might even be in a delayed open.
Most likely, yeah.
We're seeing flutter out of the gate, obviously having the US move from last night. We got Vistry up. It's just on a wide spread there. Next, up 67 basis points on the back of those good sentiment for UK retail.
We've got IG Group at number 5 there, up 0.37%. Love to see it.
We don't mention that. Persimmon up there as well, 50 basis points. So let's see the losers. The losers are good old Iron Brew down there at the bottom, down 75 basis points. St James's Place. This was after me saying that I'd sold out of my pension yesterday. St James's Place, that coming with a shock and horror. But yeah, I have moved everything into cash. I don't like these levels, don't like them. So down 40 basis points, St James's Place, Burberry small off as well. But we're waiting for Kingfisher. We're going to have to wait another 4 minutes though, because it's in an extended auction.
Travis Perkins up 3.91%.
So Travis Perkins is the nearest comp, the nearest peer to Kingfisher, and that gives you an indication of how well this has been taken. Up 4% this morning before Kingfisher has even opened.
Wow.
NatWest up there as well, along with and the other banks, not really. Aberdeen up 60 basis points.
Barclays there, up
Diageo.
0.59%.
Diageo's just dying by the day. It's like an inverse NVIDIA.
Well, it's up 0.56%.
Yeah, but it was above 18 quid this time yesterday. Dismal, dismal, dismal. So, well, there you go. If I'm going to buy a bottle of whiskey for Julian Wheeler, then it's got to be a Diageo one, doesn't it? Okay, shall we have a quick look in Europe before we
Let's have a look in Europe. Let's see how Porsche's doing.
I'm tempted. Oh, I did get those Puma yesterday. Remember, everybody, I set the limit on Puma of 21.22, I think it was, or 21.30. Can't remember. But we did get those. It just it dropped down there. But there's Porsche. Porsche up 1.5%. Right, I'm going to set a reminder. So just to remind everybody how you set those reminders in the system, you go on to the page, you go to alert, and then price level.
What are you thinking?
I think 40 euros 85.
40.85, and that's where you get in.
And we'll go, the reminder, we'll just put a little 911 in there. Or do we have what's a Porsche model that we can pop in there?
911. I'm pretty sure their ticker.
Yeah, let's go 91.
Might be 911.
1491, just as a
911 GY.
Right, so that's in there. Let's keep an eye on that. Heineken up 1.6%. Volkswagen following Porsche higher. And Siemens up 1%. Who are the losers, Mini Cooper? Take us through it.
Let's have a look. So we've got ASML holding down 1.46%.
Now, ASMI, do not get confused with that, because that is another company entirely that's down 7% this morning. So ASMI has profit warned, but that is not ASML. It's, of course, confusing because the I is a capital and looks like a...
And if you've got dodgy eyesight like me, then you may not notice that.
Rheinmetall?
Down 1.13%. We've got Deutsche Telekom down 0.38%. And I don't know how you say this, but Konica Phillips down 0.34%. And we've got Mercedes there.
Right, let's have a look. Kingfisher going to be opening up in 1 minute's time. Less than a minute, actually. So let's see how the mighty Kingfisher...
Just saw Travis Perkins up 5.06%. So we could see an even bigger move from Kingfisher here.
It's got to be 7, do you think? So 752. So if we're talking 4% would be 263, 5% 265.5, 268. I'll make you 268.70. What are you going to do, Mini Cooper? 68.70.
I'd say 268.71 or higher.
Are you a buyer or a seller?
Buyer.
268.70.
I'll go I think it's going to come out at 268.71.
Right,
or higher.
You buy them for me at 270, sir. I made you a two-way price.
I thought you were saying...
How many do you want to buy at 70?
I thought you were saying what price you think it's going to come out at. So I said one higher than you.
Right, so you think 271. Let's see. It's about to open. Mini Cooper's long at 71. What are you people doing here? Are you a buyer of Kingfisher? Are you going to B&Q it? Or do we think that it's all a flash in the pan? And it doesn't sound like it. It sounds like these are really good numbers. We overall looks an achievable H2 profit before tax outcome, which should give confidence on trading. Investor expectations has been subdued, and it's trading on a 10 times earnings. There it is. It's off at 290. Mini Cooper. Woo! There you go, mate. I'm going to have to buy you a bottle of whiskey as well.
Up 15%.
Up 15%. So much for Singers, giving us an indication of up 5. Let's look. So will that make Travis Perkins kick on as well? UK home restoration is alive and kicking. Oh, those shorts are going to be burning.
Yeah. What is our client sentiment on Kingfisher at the moment out of interest, Rich?
Let's have a look at the client sentiment, sir. On the member, you can find this on the platform. 85% of them have long.
That's what we want to say.
85% of IG clients, very smart.
This week, 62% sales, and today, 70% sales.
Well done if you are long some
What's
Kingfisher.
What's Travis Perkins up?
Right, let's go back to Travis. Travis now up 5.2. It's steady there.
Still good, but just not as good as Kingfisher.
Yeah, so let's keep an eye on those. At the top of the leaderboard, we'll add in Kingfisher there. Whew.
Almost 17% now.
Hey, you're happy. You think you've actually bought them, don't you?
Well, I'm happy to get my bottle of whiskey.
I'll give you some spending money for Sweden. There you go. Some Swedish krona.
Yeah, I've never been to Sweden, but I've heard very good things from Ronnie.
Is it Stockholm you're going to?
Yeah, Stockholm, yeah.
Paradise. EasyJet, we talked about yesterday on the back of the Gatwick second runway that's going to come in 17 years' time. Then that will be the one that Mini Cooper uses to go off on his holidays when he's my age. SSE 1718. So that has been weak recently. IAG strong as well. Let's take a look at your currencies this morning. What's happening in the world of FX? Cable back above 135.
We've got dollar yen up 0.02%. We've got GBP euro up 0.07%. Euro JPY down 0.06%.
Am I going blind? Where's euro dollar on there? We take it euro dollar off the major FX board. Sort that this morning, please, sir. Right, commodities world. We are seeing red across the board. Is this a stronger dollar? Oil down 60 basis points. That's your Brent crude. WTI's also been taken off this. Please fix that this morning. Please fix. And gold has been taken off as well, major commodities.
Yeah, I was going to say I couldn't see gold.
What is going on? Spot silver down 80 basis points. High-grade copper cannot really hold these rallies. It tried 465 yesterday, but it's struggling. See if you can get London LME copper on there at the same time, will you please? So that's your job for the morning, sir.
How am I meant to remember all these requests? You've just fired like 5 at me.
Because I trust you, sir. I trust you. Pete Ward has taught you well.
Pete Ward's taught me well. Very true.
I won't say everything he knows because that would have been your first day. FTSE up 12 basis points. There it is. It's off and running. It's beating the US 500.
For once.
Chris Beecham's not going to get his...
Chris is probably on the desk crying.
The DAX up 35 basis points after that horrific day yesterday. And yeah, China. Hong Kong down 1%. Yeah, it was a bad day or bad night, I should say, for Chinese shares second day running.
China.
We're seeing weakness in Hong Kong. There it is. We're getting some sound effects in. Right, Mini Cooper, what have we not looked at? We haven't looked at Smarter Web. Now, I said yesterday, I think you should start buying back from some stock. Smarter Web up 10% yesterday. So is there a chance that he does something like this? Well, we have Andrew Webley coming into the studio, eh? It's a brave man that comes into the studio after you're stopped doing that.
He's coming back.
He is. He's coming back in on the 22nd of October. So we will have Andrew Webley. What do we think Smarter Web share price will be by then? That is the poll of the morning. When Andrew Webley steps in here on the 22nd of October, what are we going to see Smarter Web? Is it going to be sub £1? Producer Phil, are we typing? Is it going to be sub £1? Is it going to be between £1 and £1.25? Is it going to be 125 to 175? Or is it going to be over 175? Smarter Web on the 22nd of October.
You just never know. It's just so volatile. But what I was going to say is they came out this morning. There's an RNS on the LSE. They purchased 55 Bitcoin at an average price of $113,350.
There it is. So that takes their total holdings up to 209 million. 209 million sterling.
That's sterling, yeah, or 2,525 Bitcoin.
Now, the FT obviously watched the show because they've started running a story on the crypto hoarders turning to share buybacks. That's in this morning's section. So they say the tactic's probably the death rattle for some, as the crypto treasury business models, they've never liked these things, have they?
No.
Some crypto treasury companies are trading below the value of their tokens. So, of course, that's not Smarter Web. Smarter Web's trading at 1.3, well, now 1.4 times. But some of the lesser trusted one, let's say, are trading below. So that's quite a nice little AI-generated picture, isn't it? It's
Very
like
nice.
It's like a bakery.
A bakery?
It's like a bakery.
What are you thinking?
It's like a Greg's, but you can buy Bitcoin.
What were you thinking then? What, like croissants or something?
Well, it's loaves of bread is usually, and cakes and stuff, isn't it?
Yeah. I said that because you were thinking about getting a croissant this morning and prep.
I'm small worried about the targeted ads I'm getting. Smart Face Serum. What is going on there? A revolution in skincare. A game changer in the skincare industry.
What you've been doing on your computer, just looking up skincare routines?
Well, no, but if I've been putting on the moisturizer, I'm worried my phone's watching me and now targeting me with skincare routines. Right, so Kate Murphy saying hopefully Smarter Web goes much higher because she's got 52% to make up. And Gavin Acker saying hopefully this is the double bottom forming. Right, Ørsted, we talked about this morning. Ørsted up 10%. We're on delayed there in Denmark, so we're going to have to see. We're going to have to pretend to trade, and then we can see exactly where it is. So there we go. Right, 119. Wow, 119 for Ørsted. So making back some of those huge losses that it's come down from 184. Mini Cooper.
I was going to say, I wouldn't be bullish on that if Trump's against it. Just no.
Shall we run headway into fast markets after the break, sir?
Let's go. Let's do it.
We'll see you in 2 minutes. Get your suggestions in for anything you would like us to look at. We're already going to talk Oracle with the Oracle himself, Long Kingfisher at 271.
And Micron Technology.
You want to talk Micron as well?
Yeah, they're reporting tonight.
We'll talk Micron. We'll see you in 2. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris C.J. Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns. Cash returns, come on.
All right, welcome to Fast Markets, the part of the show which is a bit higher paced, and Mini Cooper is ready for it.
Let's do it.
So we're going to bang through 4 or 5 stocks, even away from the numbers. Vodafone, he says, boring, Vodafone would be good. A 5G network announcement yesterday, and the share buyback continues. We'll come to that in a second. Let's start with Oracle. Oracle chart up. Look at that. It has been an absolute dream, hasn't it? Since those numbers, the stock rising 40% in a day, it peaked above 345. It came back. It gives you that second opportunity to buy it at 293 twice. The latest chance was on Thursday of last week, top deal. So Oracle are confirmed as part of that deal, along with Dell, along with Fox, and they're going to provide the security and obviously everything around the hosting, but that goes along with these fantastic numbers it's had recently. Shall we take a look at the tip ranks?
Let's have a look at tip ranks.
Tip ranks, strong buy. We've got a 7 only on the smart score.
I thought it'd be higher than that.
But these analyst consensus, the latest ones, we've got UBS at 360, TD Cowen 375, Bernstein 363, Berenberg currently hosting their bank research conference. So every year they do a conference in Munich.
Right.
This week. Why did they do that?
Why do they do it in Munich this week?
What else is happening in Munich at this time of year?
Oktoberfest.
Oktoberfest.
There we
They
go.
take all their clients to Oktoberfest after 2 days of research.
I was thinking financial events, and you said that, I thought, beer.
So I'm going to join them on Thursday evening. I'm off
Will
to
you be doing the
Oktoberfest.
show Thursday morning?
I won't be doing it Friday morning, I'll tell you that. So I will be in Munich. That would certainly be an interesting one, live from the tent of Oktoberfest.
Imagine.
So Oracle, as I say, Berenberg are one of the bears, Goldman Sachs are another bear, but there was also a spot of negativity coming from Jefferies yesterday because there's a new management structure being announced. And the new management structure is to have joint CEOs. And that's Clay Magourik and Mike Sicilia. Now, Jefferies says, yes, both are real product-driven leaders. And the executive position Oracle to accelerate its momentum in enterprise AI. But they do believe the return of a co-CE structure has led to share underperformance in some of the peers. And they're a little bit worried there.
So they think the co-CEO structure just doesn't work as well as just one CEO, of course, like most companies would have.
Yeah.
Interesting.
Which you do see often. But in a company as big as Oracle, with the huge surge in these revenues, maybe they get away with it.
Yeah, I mean, particularly like you said, they're getting involved with TikTok, which is absolutely huge. It's huge.
Yeah. Are you on TikTok?
Occasionally. I don't use that much. I mainly use Instagram for like social media. I just have like a small Instagram with like my close friends.
Right.
And that's it. But I try not to use social media that much.
Let's get on to Micron, Mini Cooper.
Let's have a look at Micron. So there was a good article on IG's own website, written by Axel. So Micron are reporting later tonight after the close.
Big one.
Revenue is expected to be $11.2 billion, which would represent a near 45% year-over-year increase. Let's have a look what it's saying. So yeah, mainly with respect to the AI demand drives high bandwidth memory success, and forward guidance holds key to sentiment. So straight from the article, whether Micron's investment plans, such as heavy spending in the US chip fabrication facilities, research and development, and ramping HBM production are paying off in terms of ramp-ups, customer wins, and yield improvements will be crucial.
Yeah, it's tricky because they have run into numbers. Have a look at that chart.
It's up year to date 100%.
It's up in September. What's that? 40%? 35%?
Over the past 5 years, it's gained 28.6% on a total annualized return.
Tell you what, it wasn't great for a long time.
Yeah.
Micron was always the forgotten stock, but Oracle gave it that real boost.
Yeah.
And now
Year to date, it's done very well, to be fair.
I'd be scared holding that into numbers. I would be scared holding that.
Yeah.
No game for me, I think. Not going to touch that one.
What have we got next?
Well, we've got to have a look at Vodafone since Neil asked for it. So
Let's talk about it anyway. Come on.
Let's get Vodafone up there. I haven't actually looked at this for a while. So the news yesterday was, is it this one? Vodafone 3 has awarded a £2 billion deal to Swedish telecom maker Ericsson and Nokia, good old Nokia, to supply 5G communications equipment into the next decade. So that is the news yesterday on 5G. Let's see how big the buyback is per day. Of course, the buyback that's been going on for 18 months now.
18 months.
Yeah, so we're getting into the home straight. If this was a 400 meters,
Where would we be?
we'd be going across the 8th hurdle, which is normally when things start to get a bit tiring.
In terms of like meters, how many meters long is the 8th hurdle? Is it like 300 meters or is it
285?
185?
Yeah.
That was very precise.
Big shout out to Jenny Meadows as well. So Jenny Meadows
Runner, right.
she's the coach of Kelly.
She used to be, because I swear I watched her in the Olympics when I was younger.
That's right. Yeah. So Jenny was in my under 20 Great Britain team. So I was the captain
Yeah.
of the GB Juniors, and Jenny was our 400 meter runner.
400 meters.
And now she's gone on to coach Keely, and also we had second place as well. God, it's so bad. My name, Gemma. But we got second and third in the.
I saw highlights.
Meters there.
I saw highlights. I'm trying to remember them now. Is it in Tokyo?
Yeah.
In Tokyo, yeah.
Yeah. Great. It's a shame it's finished. It's been an incredible, good 10 days athletics there. So Vodafone, it's just a bit of a nothing done for me. So 6.4 million shares per day. Of course, the average is 10, but it's back with who are doing it now? It's Goldman's. Yeah, don't trust them. Don't trust them for a minute after what they did last time. So, funnily enough, the stock has stopped going higher since Goldman's started on the buyback.
Got SWC share price there.
Okay, so yeah, Barclays. Andrew McKelvey asking Barclays, or shall we go to the poll results? Let's have a quick look at the poll results. So by the 22nd of October, where will SWC be? 40% going for sub £1.
Oh.
Controversial. Well, that's going to be an interesting interview, isn't it? You've got to ask some tough questions then.
And we've got just 17% are saying over £1.75, 19% in between 1.25 and 1.75, and 24% between £1 and £1.25.
Just having a look at the analytics page. So they've got £211 million of NAV. So if the stock price was £1 or sub £1, we'd be down to a 1.2 times multiple.
Okay.
Amazing.
Because what did SWC get to? Did it get to like £4.50, £5?
£5, yeah.
£5.
I mean, admittedly, at that point, we were saying, what is going on?
Yeah.
This is insane. But yeah, sub £1, yeah, I'll take high. I went for between 125 and 175. So there's my disclosure.
Should we look at Barclays?
Yeah, let's have a quick look at Barclays. What do you think of Barclays here? 384. It's been a real sterling performance. Absolute beautiful, hasn't it?
Yeah, like a lot of the UK banks in general. But yeah, price chart on Barclays is looking pretty good.
Yeah, and I must admit that's one that I'd be long UK banks.
Yeah.
But would I choose this or Lloyd's? Should we take a look at Lloyd's as well? If
Lloyd's,
I had to choose one.
Talking about UK banks, I saw HSBC is now the largest constituent in the FTSE 100. It overtook AstraZeneca, I think it was.
Yeah, that's right.
So an interesting fact.
So HSBC, we don't talk about enough, really, do we? There's that. I've never traded that for years.
Because obviously, for those of you who don't know, the FTSE 100 is a market cap weighted index. So therefore, HSBC has the most price impact on the FTSE 100.
Whoa, tricky. But yeah, happy to be long financials. I'm long regional banks in the US. That is where my current holding is. But I'd feel safer in Barclays than I would a lot of other stocks at the moment.
I think banks over the past few years, generally speaking, have done pretty damn well. And one of the reasons is because interest rates, well, they're much higher than they were just before COVID happened, right? Mm-hmm. So they've done very well off the higher net interest income, the differential, which of course is a lot of their revenue. Yeah. So they have benefited from that. And you could say, on September the 17th, US reduced rates by 25 bips, but you could argue, my personal view is that they're not going to go that much lower anytime soon. So,
interest rates.
Interest rates,
I'm
correct.
not going to go lower.
Interest rates, correct.
Interesting. Stephen Moran will not be happy with you. Right, one last look at Kingfisher. £3.
£3. What's that then?
Absolutely
like 18% down? I can't see that from here, Rich. What's that in percentage terms?
Kingfisher, £3.01. So they've got over £3. Look, the shorts are getting absolutely murdered on this.
19.43%.
Let's have a look at the 5-minute chart. There it is. It's just gone higher and higher and higher. Good stuff. Right, Kingfisher. We shall leave our good friend Mini Cooper. Thank you for coming back in.
Thank you for having me.
It's been wonderful to have you in. He's off to Specsavers, and we shall have Julian Wheeler after the break.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
hello, welcome back. And we have someone that everyone's been asking for since that MongoDB comment when you were here, Julian. It's so good to have you back because I was on holiday getting all these messages going, bring Julian back, bring Julian back. I'm like, I know, I'm by the sea, people. I cannot bring Julian back right now. And he's in France. So good to have you back.
Thank you very much, Angie. It's very nice to be back.
So much has happened.
Well, it always does. Something happens every day.
NVIDIA, of course, is something that we can talk about, but we're going to save that for a bit for later because we talked about it this morning already. But our clients and our friends here always want to talk about something that's moving. One that is Funko.
Oh, Funko. Right, well, probably people have never heard of Funko.
What is Funko?
Funko is, if I said a Funko Pop.
No.
Still blank. Okay. Now I'll talk to people that anybody who's got, there's its chart, anybody who's got young children.
I have to.
Okay, so I'm probably thinking mainly girls between 6 and 14.
I have a 10-year-old girl.
Does she know about K-pop demon hunters?
No.
No.
No. Unless she's
Does she not
hiding
watch
it
TV?
really, she's hiding it really well.
Do you have a Netflix subscription?
I cancelled my Netflix subscription. I have Netflix shares.
Well, they're good.
Cancelled it.
Oh, okay.
Because they cheekily got me in at $9.99, and then within 2 months or something, it went to $14.99.
That's right. Yeah, well, we like that. As a shareholder, you must have loved that. Okay, so, all right. So if you haven't then, but everybody else, I'm quite sure, listening, watching, knows exactly what I'm talking about. This is a global phenomenon.
Okay.
It is the most watched. It's taken more hours of global viewing on Netflix than anything else. It's beaten Squid Game. It's 7 of the top 20 global songs come from the film. Right? So this is an animated, there it is, K-pop demon hunters. The idea is,
Lord, you want my daughter to watch this? She's going to end up dressing like them.
that's it. Okay, so what you have here is you have the beginnings of a franchise. The amount this has been watched, the amount it is taken off everywhere. It's had more hours than anything else. As I say, the music's all over the place. This is a phenomenon.
How does this rate against like How to Train Your Dragon?
How to Train Your Dragon, that's very good. I would think this is going to be the next big children's franchise. You have more continuing movies. The irony of this is that Sony made the film, commissioned by Netflix. Sony had no idea it was going to be that successful. And Netflix very cunningly bought the entire IP and rights forevermore to this thing. Sony apparently are furious. So the details and the deal of doing the second film, which is obviously coming, apparently Netflix are looking for another studio to make it. But we won't get into all that. Why Funko? Funko is going to make the dolls. The merch.
The merch.
The merch. It's all about the merch.
And they've monopolized making the merch.
Well, I've checked. They don't have an exclusive.
Okay.
But a Funko Pop, as it's called. They Funko Popped Marvel characters, Star Wars, Loki, Wolverine, Hulk.
Oh, are they
all
the
of
really
those.
scary looking?
They're those dolls which have a sort of big head.
Eyes with
Big
no
sort of
white.
black eye. Yes, that's right. So, Funko. Now, you're looking at the chart. You say, well, wait a second. Why is it doing so badly? The answer is because it was riding high. There it is in January at about $14. Then we had tariffs. Their products made in China. Suddenly, what's the price of the doll? And you're dealing with a low-priced item. What's the tariff on it? I don't know. So orders stopped. So the stock cratered through there, all the way down.
Yep.
There's also, we think there's some mismanagement by the company. It also has a lot of debt. So this company was in serious trouble. Now then, we go on down to August there, and you hit the bottom, 2.5 on that number there, crash. Now at this point, the company is on life support virtually. We're talking about, at that point, it's probably about $100 million. That's it. Has revenues of $1 billion, right? So but it has debt of 250 million. So what's happened? Around the time of that call, I listened to that call. I listened back to it. I didn't listen to it on the day. I didn't know about it. But what I found out was that Funko is going to make these K-pop demon hunters. So what is everybody going to get for Christmas is one of these. And then what's happened is they brought in...
One of these. You're telling my friends
You've got
on the
3 or
line
4.
all that everyone's going to be
Everyone's
seeing
buying
one of
these.
these.
Yes, they're going to be buying those. They are. about £13. £13 stocking filler.
Eyes bleed. This makes my eyes bleed, people. I'm just gobsmacked.
Why is it going to work? Because guess what? They brought in a new CEO to run the thing.
Okay.
Where do you think the new CEOs come from?
Some link to
Connected.
Disney, maybe?
No, who's controlling this? Netflix.
Ah,
The CEO was former general merch at Netflix.
gotcha.
So basically what he's done is he's dealt like a hand of cards. And he said, oh, I've dealt the pocket aces over there. I'll go around the table and pick up that hand.
Yeah.
So he's moved from Netflix to this company.
Clever.
He's in with, you remember Charlie Munger used to say, show me the incentive and I'll show you the outcome,
Yeah.
right? He's on an incentive package with his stock. He's got stock, he'll get a bonus of about the same again, but he really vests his stock at $8
Nice. Let's draw that
and at
in.
20.
Right.
20 over the next 3 years. So he's got to get this thing, and if that's what he's incentivized to do, that's what he can do. Now, is it possible to get the stock back up that high? Well, look, that's where it was.
Yeah.
Okay, why do I think it's all right? Because the bonds are not trading distressed. The bonds are still trading at par. The bondholders think they're going to get paid. The deal with Netflix is in place, and he's a Netflix executive. He was responsible for putting them with their management with Walmart and Amazon. So he's the right man for the job, and he's come in at the bottom. And they've got a global smash phenomenon on their hands. Now, yesterday, as you may say, unfortunately, I was all planned to talk to you about this at $3.30, which is where we've been buying it. And then yesterday, it jumped to 4. So it had a huge move, and that's because they started selling into Mexico. Yeah, I'm afraid that's yesterday's move. I couldn't predict that was going to happen. So we're a little behind. Now, will it give some back? Probably.
We should
Is it going higher?
We should have done this with Julian yesterday morning.
Well, we should, yeah. Then I'd have another Mongo. You know, I couldn't predict that. So that's because they're selling product into Mexico. Whether that's going to get around some tariffs for them, I don't know. But the point is they've got a new market. So they've moved in there. The other thing is 18% short.
Wow.
18% short on this thing because they think it's going bust. This doesn't go bust, it's going a lot higher.
Yeah. So what you're actually really saying, to filter all that down, it's super underpriced, underloved.
Nobody knows this thing, right?
Yeah.
There are 3 analysts.
Including
who
me.
cover it. Right. Including you. Everybody viewing with children knows this. But nobody knows the stock.
My children are to enable me to be here for all you friends every single morning. They are, as Julian probably is aware, they have classes and sport to within everything's allocated, right? If this were a portfolio, it would be a really, really good diversified portfolio because anything they can possibly be in, they are in, whether it's sport or music. Purely, I'm not a tiger mum. I just need them to not be on the screen that much. And the weekend, they can knock themselves out, right?
Okay. Well, at weekends they can watch this. At weekends they...
Yeah,
I've seen a couple of comments there. My son has about 20 superheroes, says Friar Tuck.
Oh, wow.
There we go. See?
Yeah.
Well,
but are any of them Funko type?
I don't know.
You know, with the black
but
eyes.
they're superheroes. They probably are. And then David Boyce there thought Labubu was the new Funko.
Yeah, that's a good
Labubu is valued where Funko would like to be.
Right.
The point is there's always more than one. The answer to that is Labubu. But if you want these K-pop dolls, you're getting them from Funko. And that's the new phenomenon.
Yeah.
So there we go.
Labubu, there are lots of fakes out there as well.
Well, the Labubu, and these are collectibles too. I mean, I'm told by a friend of mine's, 12-year-old told me earnestly, yes, but you don't open the box, he said. He said, you put them in a drawer and wait to sell them. I went, oh, do you? I said, this guy's 12 years old. He's sort of already an entrepreneur. I said, how much are you going to sell it for? When it gets to £40, I sell it.
Wow.
I said, how much was it bought for you? For my Christmas present. So nothing.
I love it.
That's a pretty good ROI, isn't
Really
it?
good return on investment.
Anyway, there you go. That's Funko. Look, it's hairy, scary. Currently, the price
Is this another Hail Mary? Is this a Julian
Well, it's a slight Hail Mary because you're talking about a company with 100 and 200 million of market cap with 250 of debt.
Friar Tuck says, yes, I mean Funko superhero.
There we go. Thank you.
There we go. Thank you for letting us know. Friar Tuck also saying bobbleheads. Is that what they're called as well?
Bobbleheads, yeah, but that's another derogatory term for them because they've got these big heads on small bodies.
I see. Okay. They scare me slightly.
No.
Speaking of scary but not so scary anymore, let's have a look at Nike, shall we?
Okay, Nike. Now we're
Would
on
you
the
like daily
we're
or
on the
weekly?
turnaround. Well, what you see there, since you put that one up,
Yeah.
you'll see the big jump in June. See that?
Mm-hmm.
That one, you're just a big green bar there.
Yeah.
That was the last quarterly earnings. Okay, that proved that Elliott Hill, they brought back the old CEO.
Yeah. You're going to say that Elliot's turnaround is working.
Elliott turnaround, that's what he seemed to imply there.
Yeah.
And rather like we had with MongoDB,
Mm-hmm.
we had one good quarter. The market went, really? Show me again, a bit Missouri about this. I want to see another one. Nike reports again next week, week today, and I think they will show continued momentum.
Does it still get said in the city where, 3 and you're good, so 3 good earnings reports?
I think it's 2.
Okay.
I think people are more, especially in a bull market like this, people are looking for things to buy. You're not going to, like a fund manager, I'm not going to get fired for owning Nike, right? You might get fired for owning Funko, but if it goes wrong, You're not going to get fired for buying Nike because everybody's buying Nike.
Yeah.
No, seriously, look, if you need to take a bit of a pull on the tech trade, then something like this is going to take money. And I'd rather own Nike than Lululemon or Starbucks or people who I think have got challenges. Nike is back to doing what it does right. It got the retail channel sorted out. It returned to selling on Amazon. Foot Locker's been acquired by Dick's Sporting, so the retail channels. And I did my own market research the weekend. I went into an office store, right, the one in Battersea Power Station. And there in the centre of the display, on the sort of special turquoise plinth, was Nike. All their shoes. So I asked the staff, I said, why is this there? If Nike bought this? No, they said, no, it's our most popular shoe. So it's big to seller.
On the purple.
On the main centre plinth. So I said, and I remember, now why does this matter? Because I went in last year. The last time I was in there last year, and they had the Adidas Speciales. And they told me that was their top seller.
Well, this is an interesting thing because many of our clients have positions in Nike, but also many have positions in Adidas.
Yeah.
Yeah.
Well, look, Adidas, Nike sort of got what I'd call lazy, happy.
Yeah, they lost their way, didn't they?
They lost their way.
They just. Chart. Let's have a look at the
right.
chart.
If you look at the long-term chart.
Let's have a look at the weekly.
What happened? Nike got into a problem there. Where's the high? Guess what? That's an old COVID. This was a classic COVID stock. Think of Peloton, other things like this.
Oh, the
right?
Peloton.
At the top there. And they said, everybody's at home. Everybody's ordering online. I know. We don't need our retail channel.
Yeah.
Let's just sell direct to consumer.
Yes, let's just
We can get more margin. Hooray, great. Yeah, great for a bit. Then your retailers say, in which case, buy Nike, shove you to the back of the store. Let's bring in Hoka. Let's bring in New Balance.
Yeah.
Let's bring in
Skechers,
Asics.
yes.
All of them.
Adidas.
And so basically, Nike got shoved aside. And that is why the last CEO got it wrong. And that is a downturn of 4 years as it went from bad to worse. But the fact is, they've still, at the bottom quarter, 11 billion in sales. $11 billion of sales. They've got to be doing something right. Well, the other thing is, you have a new product that's now no longer being promoted by, admittedly, previously the world's greatest basketball player, but is now drawing a pension, for goodness sake. I mean, you can't keep on with Jordan, right? So they have a new product, it's refreshed, it's fashion meets performance. They're back.
What's also interesting with Nike is that I'm seeing new segments appear, whereas when they lost their way a bit, it just felt like it was just, if you were someone who went to the gym, there wasn't really an offering for you. Someone who was a real hardcore runner, there wasn't a real offering for you. And also the cheaper end, they kind of almost just let it go slightly.
They just
melded into mush, right? Just one offering.
Yeah, I mean, I think there's so many more details about what they've done. They've changed how they used to do it by men's, women's, children's. Now they've changed that to by sport. So everything's targeted at a specific sport. So many, if you look across shoe lines now, so many of them are unisex anyway. And when you think about it, why should you and I run in a different shoe?
Yeah.
I mean, well, why? So if you imagine, and actually for the whole industry, I think if they get away from the old concept of men's and women's, you suddenly shrink the amount of products you need, which would be much more efficient.
I totally agree. I've been called fondly by a fellow client as Bigfoot boss because I have very large feet for a small person. I'm
Can't
size
see them.
8, Doc.
8?
8. Yes.
8.
I like wearing German shoes because the
Germans are tall.
They're tall. They are. I'm not,
therefore-
but I have a very wide base, and therefore I've been accused by certain skier friends that is why she has an unfair advantage. She never falls down when she's skiing because she has an unfair advantage. Wider base, low center of gravity. But I am a size 8 because I have wide, stable feet. And actually, I never, ever go to the female section for shoes first. I go to the male section.
Right. So I was looking at a pair of actually Pumas, just to be sure, but not just, and because I thought, well, they look quite nice. And someone said, "Don't be silly, Julian. Those are girls." I said, "They're girls, but they've got them in size 12." So, which is what I am. So
The good food, you see.
yeah. So anyway, that's shoes. So I think Nike will report next week, and I think they will show that the margins are stabilising, inventory stabilising, the product in Vietnam. We now got the tariff uncertainty. Vietnam.
Lifted?
Well, it's not lifted, but we know what it is. It's 20%. They can deal with that because the tariff will be on the value of the product as it leaves Vietnam, not the retail markup. So shall we say they may shift? Trump wants jobs back in America. He doesn't want people making Nike trainers.
No.
I mean, not enough people to do that for a start. So, I think this is, it's been managed. It's been managed. But that was one of the overhangs. But this is why, you can't, if the stock was perfect, it wouldn't be a buy. It's 70 odd now. I think it goes to 100 by early next year. Oh, sorry. And then the next thing is what's coming up next year? World Cup.
Yes, World Cup.
World Cup. That drives that's a whole product cycle, whole momentum for Nike, and it's in America.
It is, and I've already been hearing loads of chatter in Asia and because they make all the World Cup merch there, right? Let's face it.
Yep.
And that they've already started selling some of this stuff, and you always know what they're creating because it leaks out in the black market and the grey market.
Yep.
And you see them in the pasar malams, which are the night markets, right? And there's a lot of Nike.
Non-Nike stuff.
Yeah.
Oh, well, there you go.
I'm off to Asia.
That's value added.
There you go.
Go on then. We'll check it out.
Off to Asia in a few weeks, and hopefully if all goes well. I do try at least once a year. I'll take photos for you. I'll do market research on your behalf.
Thank you very much. Sorry, and the reason I laughed there, great apologies. Somebody just said, "And you're a bobblehead." That's not very nice.
I'm taking it as a compliment because I didn't know about this bobblehead until today.
Funko is the place for bobbleheads.
Funko, remember?
I didn't know them as bobbleheads, but
What is with this funky Funko? I thought you were trying to pull my leg or something. So let's talk about something that is very, very pertinent, especially in a time when we're still talking. Last time you were on, we were talking about whether there was going to be correction, no correction. You're now thinking that instead of a correction, we're going to have more of a squeeze.
Well, yeah, I mean, look, this correction you wanted, your summer correction, I said wasn't going to happen because it's not a normal year, right? We had the correction in April.
In April.
You got institutions, especially foreign institutions, out of the market. They are squealing and struggling and gnashing and saying, why is this market going up? This is the most hated rally. Here's another thing. The Fed cut rates the other day. So if you're fighting the market and selling it, you're fighting the Fed. The fact is, when the Fed cuts rates with the market within, say, a couple of percent of its high, historically it goes up another 15% in the next 12 months. Because this is what, as Powell called it himself, a risk management cut. Right? So he's basically saying we don't need monetary policy this restrictive because inflation has come down a little. Therefore, I'm cutting rates, not because we're about to hit recession, oh my God, panic, but because we're just easing it along. That is, if you like, a positive rate cut. When the market crashes...
It's when it's a negative
That's right.
rate cut.
Then the market doesn't. So, Fed cutting rates slowly into positive stuff. Economics going well. The retail sales are fine. The wealth effect. This is what people forget. The US consumer owns the stock market.
It does.
The stock market goes higher, they're making more and more money.
And I have this theory, and feel free to debunk this bobbleheads theory, is that in the last decade or so, what people don't realize is that the number of richer Americans has increased.
Absolutely.
And therefore, the spending of this layer of richer Americans, and of course they own shares and you know, all kinds of financial instruments, they have been able to weather all the, you know, chaos, if you like, more than the Joe Blogs on the street there in the US.
Absolutely right. I mean, there is definitely a two-speed economy, and you'll see it most when the airlines report. Because airlines have, obviously, for the same plane, you can fly at the sharp end, you can fly at the big end.
Always want to turn left.
If you turn left.
Always want to turn left.
And I think United Airlines, which I like, by the way, United Airlines will tell you that the turning left premium is doing gangbusters. They're sold out. And as a result, they can therefore afford to discount or just fill up the back of the plane. So I think you'll see, you know, that nowhere do you see it more evidence of two-speed economy than on an airline. And it's the front stuff that's selling.
So let's take a look at dividend stocks, because there are several, you know, of our clients very prescient saying, you know, we've eaten enough Mag 7, we've loaded up on NVIDIA to the point where, you know, we saw that move yesterday, and you know, to be fair, a lot of people are starting to get very nervous. You know, need to diversify somehow, and also diversify into higher divvy stocks. I personally, and this is not trading advice, I like my BPs, I like my Shells, because they are big divvy payers. Lloyd's is also another one, which is why it's always well held. Which ones do you like?
Okay, well, obviously I've got to give you an American one. That's my market. What are you getting paid on your dividend in BP and Shell? About 4-ish, 4%? Something like that?
BP was a bit higher the last time I checked.
5, maybe. 5.
Here we are. I've got a good and reminder, sell before 5 there. Right, so fundamentals.
Sorry, I've given you a tough question.
No.
I reckon it's probably 5 and a bit. 5.7.
Yeah, 5.7.
Okay, right. How about mine, which is over 7?
Oh.
7. Remember the hippo in Madagascar? I like
Yes.
it big, I like it chunky.
I like it chunky.
So I like a chunky dividend. If I'm going to buy a dividend stock.
Don't let him loose in Colombia.
Okay, so Pfizer.
Yes.
Pfizer, drug company. How can it yields 7%? There you go. Pfizer yields 7%, because there, 7.15, because it's lost its way. $136 billion company with a dividend yield of 5.175. On a P of about 8, right? This is cheap. Why? Because they haven't produced a blockbuster drug for a while. They've got patent expiration. The last time they had something good, which is, you'll see there, that peak, that was when the COVID vaccine stuff. And, you know, they were one of the makers of the vaccines. Crashed since then. They've got it. Here's what happened 2 weeks ago. Guess who was in town? The CEO. CEO of Pfizer. Now, sadly, I was away, or I'd have gone to the dinner. 13 people turned up for his dinner. 13. To give you an idea, I went to a lunch for Duolingo, the, you know, the
app for learning language.
That was 30 odd for lunch. The chief executive, and they were just IR people. The chief executive of one of the world's great drug companies, 13 people only wanted to attend a dinner. That tells you something right there. Nobody cares. Okay, here's what he talked about. He talked about AI. AI? It's all about efficiency. When you're in the drug business, discovering drugs, the cost of compute, trial, running tests, doing it over simulations, all of that costs money. What he was suggesting was that AI is going to cut their time to market dramatically and cut costs. Now, for a stock like Palantir, cutting costs is irrelevant. No one's going to pay for that. But when you're on a 7% yield and you're on 8 times earnings, you protect my earnings by cutting costs. I'm going to like that.
That is.
However, there is also, they have a shot. They have a shot of being more than just a 7% yielder. Yesterday, which I didn't know, I wasn't predicting this, they made an acquisition. They bought something called Metsera. Metsera recently came public, is in the GLP-1.
Oh, yes. I was going to say, my eyes lit up because, as you know, I'm very, very interested in the GLP-1 space. I have Eli Lilly. But also, Metsera, tell me, there's someone
I come bearing gifts. So, as a thank you for MongoDB, which was rather special, a nice Lefroy star.
Oh, how lovely.
And for her ladyship, of course.
He gets whiskey and I
get whiskey.
get coffee.
Oh, excellent.
So, yes, thank you once again.
Well, it's my pleasure.
Great,
My
Jack.
pleasure. They won't always do that. But,
We'll see.
I have no pressure. I'll find another one for you. Thank you, Rich. Oh, that's very nice. Did somebody tell him I drank whiskey?
Yeah.
Very clever. That's doing your research.
Only a bobblehead.
Only a bobblehead. Right.
Thanks, Rich, for the coffee.
Thank you very much.
You know
Oh,
I
I should
need it.
enjoy
Oh,
that.
my-
We'll put that there. Very good. Advert for Lefroy too.
Okay,
Lovely.
we will get back to
Sorry,
Pfizer.
back to
We'll get back to
Pfizer.
Pfizer, but we have
GLPs.
9 a.m. right now,
Right.
which is all sessions,
Yes.
which you've done with me before. So we'll quickly get round to that, and then we'll come back to Pfizer. But
Okay.
we'll go to a quick sting and come back. Stay right there. Right, here we are, all sessions at the bell. You can ring our brand new bell from one of our clients who sent it all the way from Nottingham, 101 Stop Loss Street.
The bull is open.
The bull is open indeed, and let's see how it's shaking out. If you look, and I'll get the gallery to try and get my chart up if you can see, because I am going to flip it round to the winners list first. We've got Plug Power up at 6.5%. Oh, yes, we have a new studio here, and so I'm still getting used to the configuration. Here we are, and F11, as producer Phil's telling me, we've got Plug Power up 7% now, 7.5%. It's really having a go. Clean Spark as well, up there. Snap, which has joined the 24-hour offering here at IG, is also up. Any of those names pop out at you?
Okay, so of those, Micron is fantastic because, of course, that's memory. Every time you're going to get the more AI, the more chips, you have to have the memory. Boeing, I like it's come down. Boeing's up there. Boeing is, I've liked all year. It's had a correction over during the strike. That's brought it down about $30. Always buy them when there's a strike because the strike gets sorted and we go back up again. And Boeing is, Trump head of sales selling those like hotcakes.
Nike is up.
There's Nike. We've just been talking about it.
Yeah.
People obviously getting ahead and buying it early.
Tesla's been on a rip recently.
No, please don't talk to me about Tesla.
I've said
I'll let
that
you talk
just
to
to
Bill.
wind you up.
Talk to Bill about Tesla.
So let's have a look elsewhere because now that I've got this on the right side, we've got, let's see, have a look at the losers list. We've got Beyond Meat, which is so volatile. It's always either top loser, mostly on top losers rather than top winners. I tried their first offering when it was first unveiled and felt that it was, I could tell it wasn't meat. And,
And
also they're now rightly, which is why I thought they should have done all along, is not go to Beyond Meat, but rather a bit less meat.
Bit less meat.
Bit less meat. It should have been.
Beyond Meat was, I mean, they had a deal with McDonald's, then they didn't, and you know, and it's been copied. I mean, right, in the losers column, there's Lululemon. Always going to be a loser for
Are
me.
you saying that to wind me up? Because you
Yes,
know,
yes. No, I'm trying to be consistent. I can't say to buy one week and a sell the next, or the other way around.
you know I have
There's
that
NVIDIA
bet
giving a
on.
bit back.
Yeah.
NVIDIA went up loads yesterday. I don't like that. I really don't like that deal yesterday. 100 billion.
Okay. Is this because it's basically buying its customers, its demand? Is that why you don't like
It's
it?
round tripping. Let's say I say to you, right, Ange, come and invest with me at Shard. And you go, oh, well, no, I don't think I will. I said, no, it's okay. Look, I'll give you £1 million. Now you invest that million with me. Is that good business for me? Not really. So they've said, OpenAI, you've got to buy our chips. Remember when I was on last time, we talked about OpenAI's giving this big order to Broadcom. So NVIDIA said, oh, hold on, don't go to Broadcom, come to us, and here's $100 billion of investment, which you can now spend back with me. That's round tripping. I mean, you know, I don't get it. So I was surprised the stock was up so much yesterday.
So that leads me to my next question. If it's buying revenue, why did we see that pop? Because I was awake last night going, wait a minute, 3.5%, 4%, this doesn't make sense.
I would agree, which is why I see it's down again in your, when people have had a chance to think about it, it's one of your downs in your pre-session this morning. Look, NVIDIA is still leading, but the more they do bought business, as it were, they've funded CoreWeave, they've funded Lambda, now they're funding OpenAI. I mean, eventually, you know, this is eating yourself. And I don't like it. I don't like it. So but I've told you that before. NVIDIA's not a short. It's too hard to short. There are better things to short, but it's not a buy for me. Definitely not a 180. It's not a buy.
You'd have to be a very brave person to short.
Well,
NVIDIA.
yeah, you want to wait for the chart to tell you.
So we've got a few, a lot now, good questions coming in on the chat. Theta Decay, love that that mantle. Can you give us a link to the IG Discord group? You just have to message Maturin. If you're not on Discord, I highly recommend you are, because what a wonderful civilized bunch of investors and traders we have here. They never are on Discord when the show is on, but once the show is off, they all go onto Discord and they find their mates who's trading the same thing that I'm investing in, and they share this wonderful information on Discord. Make sure you tap Maturin, because you have to be invited, of course. It's closed loop, but it's well worth it. I highly recommend it. DWS Group says Jugga Jugga as a Germany high yield dividend stock. And then why don't you read up Funky Gibbons?
Funky Gibbon. How about Halfords for a good dividend stock? Okay, 7%. You get, the UK as a whole is pretty cheap, most of it, because we have just been devalued. Halfords, I don't know it specifically as a business, but intrinsically, you'd feel it's pretty stable. You're talking about bikes, homeware, you're talking about fixing things, you're talking about maintenance.
I always go in there for windscreen wipers.
Yeah, you're talking about constant maintenance. So I would say, as long as the balance sheet's okay and there's not too much debt or anything's coming through like that, then yeah, I'd have no problem with that. That is said purely from a gut feel. I haven't looked at it, with all the caveats that I'm not giving it a massive recommendation, but it doesn't sound wrong.
The other thing with Halfords too is I have my eye on this stock to see for a really good entry point, because I do like the way it is. In a way, they have thought out their logistics and how they are placed physically. Have you noticed, Julian, when you're driving around this weekend, tell me if you noticed this, Halfords are always in a park where it's next to a B&Q and it's next to a Pets at Home.
Yes, I've seen that.
And it's always next to a grocer as well. And that is really well thought out. And I think that is, unique in its strategy. And the only other outfit that does this really well is Whitbread.
What, with their pubs or their...
And their hotel.
The hotel.
Offering. So they're always side by side and they offer this up. The only thing with Halford is right now, as you can see my EMAs there, I
wonder if it's done by the Halfords or the actual sort of, the actual office...
Retail park?
The retail park. Whether they say, okay, we want a grocer, we want a Halford, we want to, this is our team.
I think they have
bring them in. So we bring a group in together.
But Halfords are clever in that.
They're part of it.
Yes.
Well, they always say it's all about location, and clearly one of the problems is parking.
Yeah.
So if you go into a park and then you get everything done in one go, that was the American model.
Yes.
All of us Americans always been shopped like that.
But in terms of a chart, as you can see there, my
it's
EMAs,
bottoming along.
Yeah, and I do not like the fact that it's still sitting at the bottom of the 20, the 50, the 100 EMA.
It is, but if you look at the big volume day there, the big green bar down the bottom there, yes, whenever that was. So, and then we had one...
18th of August.
Okay, that's where the volume was. And you see, we're still basically holding that. You had one sell-off down there. It was on lighter volume, and it came straight back. So that was like a fake breakdown. So I'd say as a chartist, that's okay. I think that's all right.
Right, let's quickly go to... How much time we got, Phil? Let's quickly go back to Pfizer.
Back to Pfizer.
1 minute.
Okay, so the key bit is here. They've paid, so yesterday they paid 4.9 billion for Metsera, which only recently come public.
That has that GLP-1.
This has a GLP-1, but it doesn't have a product yet. They're in trials.
Oh.
So it's a bit of a punt here.
It's a lot.
It is a lot to pay
money.
for stuff. However, I checked. Has Pfizer just overpaid? No. There was a competitive auction. There were about 4 or 5 other people who wanted to buy it. The scientists say the drug is called something like amylin or something like that. I haven't had a chance. It's literally yesterday's news. And I was buying Pfizer for its cost-cutting ability to just manage its business. If this hits, they would pay more for Metsera on top of what they've already paid. But if it hits, you're talking about it's a $90 billion market, they reckon, GLPs. And by the way, the Lilly drug and the Novo drug both have side effects. We still don't really know, but there's a lot of talk that it's to do with muscle wasting. This is, this is not me trying to, scaremonger here. That has been talked about. And people do rotate off these things. This new drug, amylin or something that Metsera is working, apparently doesn't have those. The early trials show that. If Pfizer have picked this up for about $7 billion, they will have done some seriously good business. And the stock at 7 times, if it goes into growth, it's going a lot higher. But you asked me for a dividend stock. So I think I've got a margin of safety. Nice. As Warren Buffett would say. And margin of safety buying it here.
The margin of safety as well as, even if there are any issues with the, you said the company is still trialing these drugs, you still get that nice divvy.
You're getting the dividend based on what their existing sales. The worry investors have had is that a lot of Pfizer's sales are coming to the end of their life. They've got a patent expiry problem, which is why they're buying this. Oh, by the way, they bought it out of cash, right? We haven't gone and diluted shareholders this acquisition yesterday. Just paying it out of cash. Yeah, that's how these things just generate cash. They need growth.
They do, especially when you're a pharmaceutical. I know we have to really quickly go now, but Tuck, who's I really want to get this quickly in just in 2 words, if you can. Why does NVIDIA invest in organic growth rather than buying?
Because they've run out of organic growth for now.
For now, how many?
For now,
years?
well, because their customers are all in place. They're all buying from them. So it's almost like they're having to incentivize. That's why they're effectively funding new business. That's not good.
So we'll get Julian back again. Clearly, hopefully, he will agree to come in a lot more for us now. Thank you, Rich. Thank you for that.
Yes, more of that. I'll be back.
Any other questions? If we've run out of time, please send it to me to ask@ig.com because it does come straight to me. It's not some robot. It is actually me, Bobblehead Ange. And do slam the like and subscribe button because then, that helps us bring more useful content to you. Any question, there's never, ever a silly question. Put it here because we'll get me to put it across to Julian. We've got Garth McKenzie up next, so stay tuned.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Welcome back. We have yet another expert to join us. It's Garth McKenzie, our trading expert from Traders Corner. How are you, Garth?
Hello, Rich. It's good to be back. Thanks. I'm well, thank you.
Yeah, it's great to have you back on, especially because I dropped the bombshell yesterday that I have made the cardinal sin of selling all my stocks. All my pension is now sitting in cash as of 9 p.m. last night. So it's a tricky one. So now I just sit back, relax, or do I get FOMO? Tell me about what you are seeing in the psychology side of things at the moment. There's of this grind higher. What's the way to approach it?
Well, it's actually interesting that you mentioned that. I didn't know that until you mentioned it right now, that you've sold out everything in your pension, because I've been looking at my own portfolio as well, and it's been doing nicely. And I'm looking at it, I'm thinking a lot of this stuff has run so hard, and these gains are good. I have put some protective structures around, using options and things, but I'm still thinking, is it time to lighten up a little bit here? So I get the psychology. In terms of this grind higher, I mean, it's tough if you're not in it, right? Because there's been no volatility. If you look at it, go back to about May, this market, and I'm talking mainly the US market here, but it's also elsewhere. But if we look at the S&P 500, it has just been grinding up slowly, a little bit every day, every week, moving higher. No meaningful pullbacks to get you in, and not a lot of volatility if you're an active trader on that. I mean, in terms of what we're used to seeing, this has not been a particularly volatile time over the last couple of months. It's actually been very, very linear, and that's a pain trade, isn't it? It's a pain trade if you're short. I mean, that is no fun to be short that and watching it just edge up every day a little bit more, and no meaningful pullbacks to cover into. It's tough. It's a steady grind higher. Yeah.
Yeah. And what do you mean there by saying, it hasn't given you a chance? Just develop that a bit further.
Well, what I'm saying is, let's just say, for example, that in April you got shaken out of the market when we were all talking about tariffs and all of that worry, right? The market then had a bounce, and a lot of people thought, this is just a dead cat bounce. It's going to come back down again because these tariffs are truly problematic and it's going to affect the economy and the reality is it just went up. It's been a V-shaped recovery, and if you were waiting to get back in, you never got the chance. And this market has continued to move higher and higher. And if you're not invested in that, now you're really underperforming. And the market's not giving you an opportunity to go back in because there hasn't been a pullback of any meaningful magnitude to allow you to get back in. This time around, as far as I understand it, in fact, the retail traders have actually got it right. Whereas a lot of the clever guys like us, or maybe I shouldn't even classify ourselves as the clever guys, but have not have been of the mindset that these tariffs are going to be problematic and that the market is, it's going to come back down, etc. And as I understand, I mean, there's still a lot of professional money managers that are underexposed to this market as it's rallied like this, and there's been no opportunity to get back in. Whereas the retail crowd piled in at the bottom and seemed to have made good money out of this rally.
And so how do you approach the last 3 months of the year then? What is the thought process?
Well, I mean, look, so seasonally, this time of the year, this latter part of September into early October is often a weak time of the year. But it's not a roadmap and it's not a guarantee. A lot of these seasonal patterns that I often look at haven't really been applicable this year. So I'm kind of they are a bit, and I'm almost looking at it and saying, well, you've got to actually look at some of these seasonal things and really just take them with a great pinch of salt now, because they're not working. Yes, in the past, this late September into early August, into early October period has been a bit weak seasonally. But right now, this market just feels like it's got so much momentum behind it, and the pain trade is up. And if you're not invested, it's tough. And if you're short, you're really suffering, and you're being forced to cover, which pushes the market higher as well.
And where do you think we are in that stage? The momentum. And we're talking about specific funds that only trade on momentum. They've got very strict rules around what they do. They don't take views on stocks, right? And then you've got, of course, the technical experts that follow these patterns. So is there any way to measure how far through a momentum-driven rally we are?
Well, you can use your typical momentum indicators, your MACDs and stochastic oscillators and things, but a lot of those things are sitting up at the top now. So you've got my stochastics have been staying in overbought territory for months now. And that is the thing about a strong trend, is that when the market is really trending strongly, those overbought, oversold indicators can remain overbought for a very long time. And they don't really help you in that respect. So I think if you're a momentum trader, you need to have something that keeps you in as long as the market's moving higher, and gets you out if it does start to turn lower. And in that respect, I'll generally look at things, moving averages are always a nice one to use. Looking at a 50-day moving average. If the market is above a 50-day moving average, it's bullish. And I'll then also look at sort of more shorter term moving averages. The two that I like to use are a 21 exponential moving average and an 8-day exponential moving average for the short term. And in general, I've found that as long as you are on the right side of that 21-day moving average, stay with it. Don't fight it. Just run with it. And when it breaks below, well, that's the time to then consider exiting or lightening up a little bit. But otherwise, stay with it, because sometimes these things run harder and further than you would ever imagine.
Oh, it already has.
It has. Yeah. Exactly, it has, and it continues to do so. I mean, every day we come in and look, and the S&P 500 is just a little bit higher and a little bit higher, and you think, well, how much higher can it go? I don't know. Nobody knows. But the reality is the bias is still to the upside, and we've got to respect that until it proves otherwise.
It's for me, if I go on previous situations like this, and it's late 2017, early 2018, it's 2006 in the great mining bull run, that it was just so easy to make money. February, March, April. I remember sitting there and we had mining positions in 23 different countries. I didn't even know there were mining operations in 23 countries across the world that you could buy on a listed exchange. But we managed to get them. And we were up $40 million by the end of April. Right now, our budget for the whole year was 10 million. And we were up 40 by the end of April. What happened? Of course, May, you had an absolute shit out, and we lost 20 million of the 40.
Language.
Now, when it's that easy, right, and the market goes up every day. We had Minnie Cooper sitting here this morning saying, oh, well, there's articles saying that, it's just going to continue going up. Retail investors in the US are jumping on any announcement. Right, that NVIDIA announcement yesterday that they're going to give OpenAI money to buy their own chips. Yeah. NVIDIA are buying their own chips. They're subsidizing customers now because they've come to the end of how much of the cow they can milk.
Yeah.
So when you're investing 100 billion of your own money, buying your own chips, and your stock goes up by 200 billion in market cap, there just is enough of a smell to me to say, do you know what? This is January 2018, and I know the next thing that we see is pretty ugly.
Yeah.
And for me, I just want to take my chips off the table. That's all, and take a bit of time out and watch as the situation develops. But even gold, even gold, I sold my gold yesterday, and I've still got a couple of options positions just in case, it's my lottery ticket up to 3,900. But even gold looks extended in the near term. What do you think?
Yeah, I think it is extended, but again, it's the same story. It's got momentum behind it, and it's running. Plenty out there are talking $4,000 by the end of the year. I don't know, maybe not. Who knows? I just think that when the bulls are running, don't stand in their way.
But I think that's the question, Gareth. What is momentum? Momentum is that everybody keeps buying until they stop buying.
Yeah,
that's the definition of momentum.
It is, and I suppose you can also say it's the greater fool theory, right? It's buying in the anticipation or the expectation that there's going to be somebody else further up the chart willing to buy from you at a higher price when you decide to sell later, and at some stage somebody's going to be the bag holder that buys the top. But when that is, nobody knows. We only know in retrospect when the top is. We only know in retrospect. So you've got to say to yourself, all right, look at that chart that you've got there. It's very stretched, right? We had a beautiful big breakout above 3,500 odd in gold. It's basically gone up in a straight line ever since that breakout, with hardly even a week of pullback.
Yeah.
How much higher does it go? Well, I don't know. Nobody really knows, but we'll know in the fullness of time, won't we? But if you're in that and the momentum is running, how do you stay in so that you can catch the rise, but also know that your losses are protected if if it does decide to turn over?
Mm-hmm.
And that's where I kind of look to the technicals. I mean, that move to me looks like the kind of move that'll end with a blow-off top, where you end up getting that chart that goes steeper and steeper until it eventually goes so steep that it almost looks like it wants to fall over backwards, right?
And this is what Spice is relying on in the art of investing as well. Everybody's telling me now, it ends with a blow-off top, and that's when I'll get out. I'm not sure that, because what we're talking about is a blow-off top is what, 10%?
Yeah, look, I have a sort of a playbook that I look at in terms of trade definitions. So mine is usually it's a sort of 20% move within a 2-week space,
mm-hmm.
and it ends with a rapidly steepening trend during that period. And usually, if it is a proper blow-off top, often what you actually get is a gap at the end. You get an exhaustion gap at the end, and then you'll end up with a daily candle which has a huge long tail to the upside, because that is the blow-off. And then you get a reversal on the day. You get a daily range where the price closes at the low or near the low of the day's range, following a massive big spike to the upside. And that's usually, to me, a fairly reliable indicator of a blow-off top.
And what happens
once
next,
you see that,
Garth?
well, what happens next usually is you start to see the price then beginning to soften, because that is an indication to me then that everybody who was going to buy has now bought. There's no more buyers left.
Beginning to soften, or like the chart that I'm showing now, and it softens quite a lot.
Yeah. But also, what if you look at that, right, you get that acceleration on the left-hand side that I referred to, and you get the big crack to the downside, but then you get an oversold bounce, but the bounce doesn't it's not strong enough to go back and take out the high.
Yeah.
That's actually that for me, right where your cursor is there, that is to me a high probability time to exit or to go short, because what it's telling you is that the market is exhausted at that point. That is a sort of it's not quite a dead cat bounce, but it's a bounce that can't go back. It can't go back as high as the previous top, and that is an indication that you then got a whole lot of trapped longs sitting at the higher levels who now could turn sellers, and then it follows with a further decline that lasts many months after that.
And yeah, that was 2001. I guess how many 50 basis point rate cuts there was in 2001.
Yeah, I mean, I've got to think back. That was very early on in my career, but there were quite a few, because I remember looking at the charts and thinking, earlier on in my career, which is sort of the early 2000s and 2010s, at that stage, you could overlay an interest rate chart over the stock market, and it was completely counter to what economic 101 theory would have had you believe.
Yeah.
That when markets are, when rates are coming down, that was when markets usually were coming down as well. And when when rates were going up, markets were going up. And why? Well, because ordinarily you cut rates in a weak economic environment. So if you've got a weak economic environment, that means corporate profits are shrinking, profit margins are shrinking, earnings are shrinking, and therefore you get a market coming down. That was the typical economic theory that was what the charts showed us, certainly in the early 2000s, and also after 2008 as well. You had market coming down very hard, but rates also coming down very hard. I don't know that correlation works anymore. We're now in a situation where we've got a rate cutting cycle. It's just beginning. Markets are still going up for now. I don't know. Will we sit back in 6 months, 12 months time and say, well, there you can see the correlation came back to play where rates came down and markets came down? Maybe not at this point. That's not what's happening.
It is really tricky, isn't it? It's everything seems to be positive for X days. Anyway, producer Phil is going to do that poll for us. How many times did the Federal Reserve cut by 50 basis points in 2001? Was it 3 times? Was it 5 times? Was it 8 times? Was it 11 times? How many times did the Federal Reserve cut by 50 basis points in 2001? And of course, that was post the dot-com bubble bursting. That was post the slowdown in corporate profits. And then, of course, in the atrocities in September as well of that year. So that's the poll. There's your guesses. Now, it is really interesting, Garth, isn't it? Because you've had Jay Powell, who's stepped away from the inflation targeting, or at least what he says is they're now back in balance. His 2 targets, he has equal focus on. Do we have an inflation problem being stoked in part by the wealth effect of stocks? Because that's what gold's telling you. Gold's telling you we are heading fast into a real significant problem.
Yeah, well, that is the thing, because already inflation is slightly above their target. It's not massively above. What are we sitting at? About 2.9%.
50% above.
Yeah, right. So the target's 2%. We're sitting at 2.9 on core, 2.7 on normal inflation, and yet they're cutting rates into that, based on the fact that the employment market is weak, which they're a bit concerned about. So they're leaning slightly more in that direction, right? Because one of their mandates is stable employment. But your question is, are they stoking a potential inflation rise? Yeah, they could be. They could be.
And what's causing the jobs weakness, do you think?
Well, I think that's an interesting one, because ordinarily one might say, okay, well, a weakening economic environment is probably what's creating some of the job losses. Maybe there's also some concern around tariffs, and companies have been holding back on hiring because of the worry about tariffs. But the other thing which we need to keep in mind is what is the effect of artificial intelligence on the employment market. Are we starting to see that make the dent in the jobs market that everybody fears, where people's jobs are being replaced by artificial intelligence? And I think we're potentially seeing that coming through in the employment data now. It's early days yet, but you can't ignore that, right?
The initial jobless claims on Thursday are going to be important. That could be real, one to watch this week. And the continuing jobless claims as well. So, we do have to be very laser focused on the employment situation now. And I just worry that maybe there's nothing wrong with employment. Maybe it is transitory with regards to tariffs and with regards to all the immigration situation. So are we lowering interest rates for something that's a transitory situation? And inflation is not transitory. Inflation is being stoked and stoked and stoked. And the only reason he wants interest rates lower, and I'm talking about the orange buffoon, is to get his debt cost down. Which I would do the same. I would lie. I would appoint an infiltrator into the Federal Reserve. I would try and take control of the Federal Reserve if I wanted to get those interest debt costs down. How long until the bond market says, not a chance? We see exactly what you're doing, and we're going to punish you for it.
Yeah, well, that's the risk. I mean, I've been quite surprised the way that the bond market, certainly the longer end of the curve, has been behaving lately, actually. I mean, we've seen 30-year yields coming down, 10-year yields coming down. To your point, I just want to go back to one thing as well, though. You talked about the orange buffoon wanting lower interest rates to fund his debt. Let's just also think about it from an inflation aspect, because the other thing that he might want is maybe they want inflation because part of the way they could deal with the debt is to inflate it away. So maybe that's also part of his thinking, is that, cut interest rates. Yes, you might stoke inflation, but that's okay if you're wanting to inflate away that debt. It's another aspect to the equation, isn't it?
But again, that leads you into significant problems with the long end, because your long end, the value of long end bonds gets obliterated if we actually get the feeling that the inflation target is null and void, it's impotent, and we're looking more like 3.5%, 4% inflation going forward, then what do interest rates at the long end get up to?
Yeah, well, that's it. I mean, when you talk about it like that, I'm certainly not excited about buying and owning long-term, long-end bonds at this stage. I don't think that's where I'd want to be invested at this point in time. The risks are high at that end, no doubt.
So what is the interest rate where you would become interested?
Well,
there's a price for everything, Garth. Come on.
Yeah.
6.5?
There is a price for everything.
7?
Yeah, maybe. It's a long way.
Because if stocks are all-time highs, then one of our very wise viewers said, look, it's all about opportunity cost. My opportunity cost of getting out of my pension, I received 4%. So what I'm saying is, right, do I expect the S&P to be 4% higher than this next year? Maybe. But how much are you paying me for taking that risk?
Yeah.
You're telling me the S&P is already at 7,000.
Yeah.
Otherwise, if it's not, then I'm better off in cash. It's really got to be 7,100, 7,200 to pay for the risk that I would be taking. And I don't think that is nailed on. So Boise asks a good question. What do you do? How do you get back in once you've messed it up and you have sold everything? How do you get back in?
Yeah, it is also a good question. I mean, look, it's also a market of stocks, remember. So we kind of talked about the S&P 500 earlier. That's been moving higher. It's also a market of stocks. There are always opportunities within individual sectors and individual stocks. So from a personal perspective, and again, because I'm a relatively short-term swing trader, notwithstanding the fact that it's run very hard, there are still opportunities in select stocks which are breaking out, which are showing the right sort of technical patterns to get involved. And then, of course, you just apply your normal logical risk management to each setup.
Mm-hmm.
If you're buying a breakout, like, I don't know, let's just say, for example, something like a client this morning was asking me about Rocket Labs. I mean, there's an interesting stock. It's run, but it looks almost like it's poised for another leg higher. So I'd probably buy that, but then have a stop loss if the break happens to fail. And that's the way I'd be kind of doing these things. It's participate, but also know where your risk is and where you need to get out if it doesn't work. If a breakout fails, well, then you get stopped out, and that's part of the nature of the business. But give yourself a chance at least.
It's about keeping that discipline at these levels, isn't it? When everything seems so easy with Oracle, I think a lot of these new entrants into trading since COVID, right? They were all sitting at home bored. They got brought in through the meme. And do you know what? The meme craze, the meme stock craze, has actually been the best marketing for Robinhood ever in the long run.
Yeah.
You look back at it now and, what a dream. It's almost like it was set up.
Yeah.
And so
perfect conditions,
Perfect conditions, but you've always been told to buy the dip, and buying the dip has always worked. Will it always work?
No, there will come a time where it doesn't work, where the last dip continues to dip, and but then that's when we know the trend has changed at that point, and then you've got to recognize it and say, okay, well, this buy the dip isn't working anymore. Let's recognize the market for what it is. Maybe it's going into a consolidation period, or maybe it's going to start a big, deep correction. But understand that there comes a time where buying the dip doesn't work. And there will be an eventual final dip that keeps dipping. But I don't know where that is. Nobody knows.
No, very true. So if I get the moving averages up there on the S&P, we're looking now. What levels are these? These are the 20, the 50, and the 100. So we're talking 6,563 on the 20. So I'm just assuming that will be close to your 21-day.
Yeah.
So that is what, 2%? Yeah, 2.2% drop from here.
Yeah. It's not much. But look back at the last couple of drops. They haven't been very much. I mean, I would think, I'm just going to get it up on my other screen over here as well while we're talking. But I mean, 6,500 is quite a big level, just technically, because that's where we had a bunch of previous highs, which were broken earlier this month. And below that, I mean, I've got a 50-day moving average at 64.30. Yeah,
that's interesting, because that's where the CTA's trigger to sell is.
Yeah.
So if we get down to that point and we break it, then you've got $100 billion of S&P getting sold by these momentum algorithm machines. So they are judging at that point. That's where the momentum story is over. 6,400 odd at the 50-day.
Yeah. So I mean, that's it, right? Those are feasible targets that you could have to the downside if we do get a little bit of selling pressure. But those are, I mean, and then those are just short-term support levels. It wouldn't take much to get there, and it wouldn't really change the bigger picture of the generally rising trend. I think a lot of people would welcome that pullback. But to my point earlier, I just think that we're in a market where the pain trade is still higher. And those that have been waiting to get on board are not getting the opportunity. And those who are short, and there's big interest in short on the the S&P futures. The short interest is huge, and those keep squeezing. So where do we go? I don't know. Like as I say, my approach with what I've been doing is I remain fully invested for now, but I've put effectively collars around the portfolio and using the S&P 500. In fact, spread trading options, which you guys offer, is what I've used. So I'm selling out the money calls, like 6,900 calls to December, and then I've been buying 6,600 puts.
Smart.
And then selling some like 6,200 puts. And doing that has been nearly self-funding.
Yeah.
And what it means is that I get to participate if we continue higher, but I'm also protected if we turn lower. And I'm only protected for the first, whatever, from 6,600 down to 6,200.
6-7%, yeah.
Exactly. And then below that, I'll start to wear it again. But I just figure, I want to participate but protect. And that's the way I've been going about it. And putting these options around the portfolio seems to work. Look, I've done them every quarter this year. Most of them have expired worthless, but it's insurance, right? So it's kind of like saying, well, I've insured my car and I didn't crash it.
Definitely.
So I paid the premium. I'm not getting the premium back. But at some stage, if I crash the car or it gets stolen, I'll be happy to have that insurance.
Yeah.
And that's the way I view it with my own portfolio and where I'm viewing the market right now. Is I'm happy to be invested, but I also want to protect it.
No, very wise indeed. Monkey Man and Marcus Kane. So I'll put these two comments together. Monkey Man's saying you're talking about hyperinflation, potentially. That's what's being stoked up. Marcus Kane saying, what are the real risks of long-term bonds? Is it rising, increasing rates? Well, no, it is this runaway inflation idea, because you don't want to hold something and have your cash in something paying 6% when inflation potentially is back to 10 to 12.
Yeah. It'll be interesting to, I'm sure you can't get it up right now, but I saw somewhere recently, it was an overlay of the current inflation cycle. And when I say current, I mean, let's go back over the last 10 years, right?
Yeah.
And then compare it to the 1970s inflation. And it's actually quite scary how the two charts are correlated. We're following a very, very similar path in terms of inflation. And what happened in the 70s was that you had the first big wave of inflation, which was then brought under control, just like we've had. We had big inflation here in 2021, 22. It's come under control now, but it's starting to pick up again. And we saw very, very similar shape to the inflation chart in the 1970s. And that second wave of inflation was huge and bigger than the first one. Now, we've got to hope we don't live through that again. But the question is, are these current moves by central banks, particularly the Fed, potentially stoking up that kind of hyperinflation? That is a big worry.
Well, it is the Fed, isn't it? Because the Bank of England's doing absolutely the right thing. It's continuing the QT and not cutting rates anymore. So it's entirely the Federal Reserve that are causing this. Well, sorry, I say the Federal Reserve, the White House Federal Reserve.
Yeah.
And they're just not reserved anymore. It's just the federal.
Well, they're not. Yeah. Well, I mean, they're not so independent anymore either. It seems that's also the big risk, right? And we know how Donald Trump's been trying to bully Powell out of there, how he's trying to install his own people into the Fed. And unfortunately, it's kind of looking increasingly like he's getting his way.
Yeah.
And the independence of the Federal Reserve is no longer quite so independent, and that is also a major concern.
Yeah, Moran is a very, very dangerous man, Stephen Moran, that's been added.
Yeah.
And that will be proved over time. Okay, good stuff. So how many times did the Fed cut by 50 basis points in 2001? It was a massive 8 times, 8 interest rate cuts of 50 basis points. Imagine. We've had one in this cycle, and you know, that already did its damage. But yeah, 8 times in 2001. Garth, thank you as always, sir. Absolute pleasure to talk to you.
Thank you. Been good. Thank you very much.
Best of luck. We'll keep an eye on that Rocket Labs as well.
Yeah, good. Take care. Thanks, Rich.
Cheers.
Cheers.